Hey everyone! With BlockSonic, you get the top Bitcoin news of the day in a practical, narrated format, so you never miss an important market move. With BlockSonic, you don't need to search for information. We find it for you. Bitcoin's short squeeze looms. Cryptocurrency market in the spotlight. The cryptocurrency landscape is heating up as Bitcoin's short squeeze potential grows, with early 2026 data indicating robust price momentum. This year, Bitcoin has surged by approximately 10%, hovering just below $97,000, primarily due to spot market activity rather than leveraged futures trades. In spot markets, buyers acquire Bitcoin directly, whereas futures allow traders leverage without actual ownership. We at BlockSonic recognize that a rally propelled by spot demand is healthier, as it reflects real interest rather than speculative bets. Check-and-chain data confirms a shift from leverage-led gains to those driven by spot purchases, moving from $90,000 to $97,000 recently. CoinGlass data adds weight to this narrative, showing that futures open interest in Bitcoin remains stable at 678,000 Bitcoin, nearly unchanged from 679,000 Bitcoin on January 8. This indicates steady leverage levels despite the recent price uptick. Furthermore, Glassnode reports negative perpetual futures funding rates, where shorts pay longs. If the spot-driven rally persists under these conditions, the risk of a short squeeze heightens. Such an event occurs when rising prices force short sellers to cover their positions, further propelling price increases as liquidations occur in succession. Meanwhile, the Nasdaq 100 has remained relatively flat, contrasting with Bitcoin's 10% rise. We at BlockSonic interpret this as a sign of Bitcoin's growing role as a high-beta, leveraged tech proxy, potentially attracting more investments and sustaining the rally. Will Bitcoin continue to redefine its position as a tech proxy amid these dynamics? Join the conversation in our chat and share your insights. Bitcoin surges amid altcoin struggles. Cryptocurrency markets react. Cryptocurrency markets are in flux as Bitcoin stabilizes above key levels, sparking shifts in altcoin dynamics and investor sentiment. We observe a significant stabilization phase within the cryptocurrency realm following Bitcoin's remarkable surge just 2 days prior. As of Thursday, Bitcoin maintains its position above the critical $94,500 mark, a pivotal point that has transitioned from resistance to support since November. Within an insightful exchange, Wendy Kai, Chief Operating Officer and co-founder of Futures, articulates that Bitcoin's current trading zone, stretching between $90,000 and $100,000, symbolizes its evolution into a sophisticated macro hedge against central bank volatility. This recent surge coincides with broader geopolitical disturbances and digital communication disruptions in Iran, fostering a narrative that underscores the value of decentralized assets free from intermediary control. Conversely, the altcoin landscape is witnessing a wave of profit-taking, notably impacting meme-coins such as Pepe and Bonk, which have faced declines of 5.9% to 8% within the last 24 hours. The selling momentum has accelerated further post-midnight, with Pepe experiencing an additional drop of 2.8%. We at BlockSonic understand that these movements highlight the inherent volatility and unique positioning of cryptocurrencies in today's financial ecosystem. The ongoing narrative of Bitcoin as a hedge against traditional financial instability only serves to bolster its standing in turbulent times. The question we pose to our audience is this: do the current market adjustments signify a broader shift in the cryptocurrency landscape? Or are these fluctuations merely part of the dynamic nature of crypto markets? We invite you to join the conversation and share your perspectives with us in the chat. If you believe in what we're doing and want to support BlockSonic's growth, Just scan the QR code on the screen or copy the link in the video description. Every contribution makes a difference and helps us keep delivering quality, independent, and up-to-date content for you. Quantum Leap in Crypto, Project 11's $20.0 million raise. Quantum threats to Bitcoin. Project 11 secures major funding. Project 11, a pioneering force in post-quantum cryptography, has successfully secured $20 million in series of funding. The round was spearheaded by Castle Island Ventures with notable involvement from Coinbase Ventures, highlighting the growing concern over quantum computing's impact on Bitcoin and other cryptocurrencies. We at BlockSonic understand that advancements in quantum computing within the next decade could potentially compromise the existing public key cryptography that underpins Bitcoin and other blockchain systems. This looming challenge necessitates a strategic shift towards a quantum-resistant cryptographic environment, which Project 11 is spearheading. Other initiatives in the post-quantum crypto domain have also gained attention, such as a Bitcoin testnet designed to implement quantum-resistant cryptography. Project 11 is focused on developing the essential tools for a seamless transition, including readiness assessments, migration testing environments, and deployment strategies. As articulated by Alex Pruden, CEO and co-founder, the stakes could not be higher as quantum capabilities evolve. Ignoring this existential risk to the digital asset ecosystem is not an option. Trillions in value hinge on these cryptographic assumptions. Networks like Bitcoin are inherently cautious in their upgrade processes. Our aim is to facilitate a deliberate migration rather than a last-minute scramble. Project 11 is actively collaborating with the Solana Foundation on quantum readiness planning and technical initiatives. The series of funding round also saw participation from Fin Capital, Variant Quantination, Nebular Formation, Lattice Fund, Sat Street Ventures, Nascent Ventures, and Balaji Srinivasan. Previously, the company raised a $6 million seed round in June 2025, led by Variant and Quantination, with Castle Island Ventures, Nebular, and Formation also contributing. Project 11 plans to unveil its next major product release in early 2026. We at BlockSonic perceive that the trajectory towards a quantum-resistant blockchain ecosystem is both essential and inevitable. How will the crypto community respond to these challenges? And what role will innovation play in ensuring a secure future for digital assets? We invite you to share your thoughts and join the discussion in the chat. Bitcoin surges, bond calm spurs crypto enthusiasm. The calm in the bond market is paving the way for an electrifying surge in Bitcoin and crypto assets. As the bond market volatility gauge declines to its lowest since October of 2021, it sets the stage for increased risk-taking in financial markets and a potential boost for digital currencies. Bitcoin's value rally, climbing 10% since the beginning of the year, has analysts forecasting a rise into six figures, a feat unseen since mid-November. This optimistic outlook is reinforced as United States Treasury bonds, the cornerstone of global finance, exhibit reduced volatility, marking their calmest state since 2021. United States Treasury bonds are highly regarded for their exceptional credit quality and minimal default risk. These bonds serve as collateral in a myriad of financial transactions, from loans to derivatives, forming the backbone of the world's financial infrastructure. Wild fluctuations in Treasury prices tighten credit and discourage risk-taking across the economy and financial markets, which typically leads to caution in stock and cryptocurrency markets. Conversely, when bond prices are stable, it facilitates credit creation, encouraging investors to channel capital into riskier assets. Currently, the ICE Bank of America Move Index, which measures expected or implied volatility in Treasury bonds over 4 weeks, has dropped to 58, the lowest since October of 2021, according to TradingView data. This decline began in April of last year. The current bond market environment is increasingly favoring rallies in Bitcoin, trading around $96,300, and tech stocks. While some enthusiasts label Bitcoin as digital gold, historically, it has shown a tendency to move in tandem with Wall Street's tech-centric index, the Nasdaq 100, and often in opposition to the MOVE index. This inverse relationship with the MOVE index persisted through Bitcoin's 2022 crash and the subsequent bull run from 2023. However, it's important to note that past data does not guarantee future outcomes, and no single indicator ensures gains. The decreasing bond market volatility is merely one of several factors strengthening the bull case for Bitcoin, alongside new ETF inflows. The markets could encounter challenges if tensions between the United States and Iran increase, or if disappointment grows over delays in the Clarity Act crypto regulation bill. We at BlockSonic understand that the current state of the bond market is creating a conducive environment for cryptocurrency growth. We at BlockSonic interpret these dynamics as a significant factor fueling investor enthusiasm for digital assets. As we assess these developments, we ask, how will the interplay of bond market dynamics and geopolitical factors shape the future of Bitcoin and cryptocurrencies? Join the discussion in the chat and share your insights. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin ETFs surge with enormous inflows, a crypto tide rising. Bitcoin and cryptocurrency ETFs see unprecedented influx amid strong market signals. The cryptocurrency landscape saw a dramatic shift as Bitcoin and other major crypto exchange-traded funds experienced significant net inflows, marking a notable trend reversal. Institutional investors showed renewed interest, driving up demand for Bitcoin ETFs in particular, following a turbulent start to the year. On January 14th, data from Sosa Value revealed that spot Bitcoin exchange-traded funds attracted approximately $843.6 million, marking their largest daily inflow in several months. This surge came after a volatile period earlier in January, when multiple days of net outflows occurred as traders scaled back their exposure. Leading the charge was BlackRock's IBIT, which pulled in around $648 million, while Fidelity's FBTC contributed approximately $125 million. Smaller inflows were distributed among other issuers, increasing the total net assets held by United States spot Bitcoin ETFs to about $128 billion. Ether-linked exchange-traded funds also saw consistent demand, with spot Ether funds recording $175 million in net inflows on the same day. This was led by BlackRock's Ether and Grayscale products, marking a gradual recovery in flows following a quiet December. Smaller spot exchange-traded funds tracking Solana and XRP also posted gains. Solana funds saw about $23.6 million in net inflows, while XRP-linked funds added $10.6 million, according to the data. The resurgence of inflows occurred as Bitcoin traded near recent highs, hovering just above the $96,000 level after a steady climb over the past week. Ether maintained a position above $3,300, while performance across altcoins remained mixed. We at BlockSonic understand that the widespread inflows across major cryptocurrencies indicate a stabilization in institutional demand following early year volatility. This renewed ETF buying interest could potentially support prices if the broader market conditions remain stable. Are we witnessing a pivotal moment for cryptocurrency markets where institutional confidence could drive sustained growth? Share your thoughts and join the conversation in the chat. Cryptocurrency market euphoria. Bitcoin sparks new wave. Bitcoin's recent surge ignites crypto market excitement, pushing sentiment to new highs unseen since last year. The cryptocurrency landscape has been set ablaze by an invigorating surge in investor sentiment, as Bitcoin's triumphant ascent has fueled a newfound wave of enthusiasm. For the first time since October, we witnessed the transformation of the market's mood to one of euphoria, a stark contrast from the trepidation that gripped traders in the wake of a significant liquidation event. The Crypto Fear and Greed Index, a barometer closely monitored by market participants, climbed to 61 on Thursday. This leap comes after weeks mired in fear and extreme fear, and just a day after standing at a neutral 48. October 11th marked a dramatic downturn, with approximately $19 billion evaporating from the crypto markets, sending altcoins into freefall and ushering in a prolonged period of risk aversion. Throughout November and December, the index lingered in the low double digits, a testament to the deep-seated caution pervading the trader community. However, the tide has turned alongside Bitcoin's rally. In the past week, Bitcoin has soared from approximately $89,800 to reach a two-month pinnacle of $97,704 on Wednesday, as reported by CoinEcho. This resurgence has played a pivotal role in restoring confidence across the broader market. It is crucial to remember that sentiment indicators serve as context rather than definitive signals. Historically, extreme fear has often aligned with market bottoms, while extended bouts of high greed typically precede market peaks. A reading of 61 indicates a growing appetite for risk, yet it falls short of the exuberance usually observed near market highs. As Bitcoin reclaims levels previously seen before the October turmoil, the rapid shift in sentiment underscores the dynamic nature of the market. Traders remain vigilant, assessing whether the recent price momentum will endure. We at BlockSonic perceive this resurgence as an intriguing testament to the resilience of the crypto space. What are your thoughts on the current market sentiment and Bitcoin's role in driving this wave of enthusiasm? We invite you to join the discussion and share your insights with us in the chat. And don't forget to subscribe to the channel, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin's long-term holders raise eyebrows with surprising moves. Bitcoin's dance with historical price zones ignites intrigue as long-term holders alter their strategies, influencing the crypto landscape in unexpected ways. Bitcoin has ventured back into a price realm where long-term holders have historically tapped out, yet this time their selling rhythm has notably shifted compared to their aggressive strategies in previous years. Bitcoin, valued at $96,833.36, has made a return to the pivotal price zone that previously hindered its progress. However, according to on-chain data from Glassnode, there is a glimmer of optimism. These seasoned holders are executing profit-taking maneuvers at a more measured pace than in years past, easing the constraints on the rally's momentum. Defined by Glassnode as wallets retaining coins for over 5 months, these experienced players have floated over 100,000 Bitcoin, equivalent to $9.62 billion. In weekly gains the previous year, when Bitcoin soared to its all-time highs, exceeding $100,000. Presently, this rate has decelerated to a mere 12,800 Bitcoin per week. This moderation indicates that while profit-taking is still active, it is markedly less aggressive than during earlier phases of distribution, Glassnode remarked in a recent analysis. The timing of this slowdown in profit realization is fortuitous, as Bitcoin's recent 10% rise over 2 weeks has propelled prices into the historical sell zone, ranging from $93,000 to $110,000. In recent weeks, long-term holders have seized profits within this price band, reinforcing market supply. Price trends since November reveal a consistent pattern. Multiple efforts to sustain a recovery rally have stalled at the lower boundary of this sell zone. Every ascent has encountered renewed selling pressure, thwarting the potential for a sustained structural recovery. Glassnode note. With prices once more navigating this supply territory, Glassnode emphasized that absorbing the distribution from long-term holders remains an essential prerequisite for any comprehensive trend reversal. While the easing of selling pressure from long-term holders bolsters the prospects for a continued rally toward $100,000, potential escalations in geopolitical tensions, such as those between the United States and Iran, could trigger widespread risk aversion and potentially drive Bitcoin prices downward. We at BlockSonic understand that the dynamics of long-term holders' actions have a profound impact on the crypto market, and their tempered approach could either pave the way for further growth or introduce unforeseen challenges. How do you perceive the evolving strategies of these Bitcoin veterans? And what implications do you foresee for the broader crypto landscape? Share your insights and join the conversation in the chat. Bitcoin's shadow looms. XRP down despite crypto advancements. Ripple's strides in Europe clash with Bitcoin's market influence, causing a ripple effect in crypto dynamics. Ripple has gained preliminary approval for an electronic money license in Luxembourg, opening new avenues for regulated payment services across the European Union. This advancement marks a significant milestone for Ripple, promising to widen its financial influence across the continent. However, the broader cryptocurrency market, heavily swayed by Bitcoin's recent performance, continues to challenge Ripple's progress. Although Ripple's regulatory achievement could potentially pave the way for amplified transaction capabilities and enhance its market presence in Europe, Bitcoin's overarching market sway cannot be overlooked. Bitcoin's recent price movements have cast a shadow over other digital assets, including Ripple's XRP, which has experienced a decrease of approximately 3%. This highlights an ongoing correlation between Bitcoin's price trends and the performance of alternative cryptocurrencies. We at BlockSonic understand that Bitcoin's influence over the crypto market remains formidable. Despite Ripple's regulatory success, Bitcoin's market dynamics continue to exert pressure on the performance of other digital currencies. We at BlockSonic perceive this as a critical interplay between innovation and market sentiment, shaping the landscape of the cryptocurrency realm. As we contemplate the future of Ripple and its ambitions in the European market, we ask, can Ripple's regulatory advancements counterbalance Bitcoin's market dominance? We invite you to share your thoughts and engage with us in the chat as we explore this dynamic further. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Bitcoin's political storm. NYC tokens controversial crash. Crypto turmoil. NYC tokens dive raises Bitcoin market concerns. We find ourselves in the midst of a storm as the Solana-based NYC token sinks over 80% shortly after its debut. Allegations of liquidity shifts and potential profiteering swirl, implicating political figures and shaking the credibility of crypto markets. Our team at BlockSonic observes allegations against former New York City Mayor Eric Adams, who faces claims of profiting from or moving funds related to the NYC token. This controversy arose after data revealed a significant liquidity withdrawal shortly after the token's launch. A statement sent to CoinDesk firmly stated, Eric Adams did not move investor funds. Eric Adams did not profit from the NYC token launch. No funds were removed from the NYC token. CoinDesk previously reported that a wallet associated with the token's deployer, extracted approximately $3 million in USDC liquidity at the market's peak, leading to an 80% price drop. Following this, on-chain data showed $1.5 million were reintroduced after the token's price had already dropped over 60%, while $900,000 remained unreturned, sparking accusations of a possible rug pull. The NYC token team claimed they rebalanced the liquidity due to high demand at launch and later replenished the pool. Despite these actions, the token remained significantly below its initial value, with DEX screener data showing a trading price of around 13 cents as of Thursday morning in Asia, down from a high of 47 cents. This collapse erased over $400 million in market value. Eric Adams marketed the NYC token as a project supporting civic initiatives, including education programs and scholarships, as well as efforts against anti-Semitism and anti-Americanism. However, details on fund management and distribution remain undisclosed. This situation casts a spotlight on politically branded tokens, often characterized by initial high demand followed by sharp reversals due to thin liquidity and concentrated control. Adams' team continues to deny any misconduct, yet on-chain records and unresolved questions regarding the token's framework persist. We at BlockSonic understand that the unfolding events around the NYC token highlight critical issues of trust and transparency in the crypto space. How do we, as a community, ensure accountability while fostering innovation in the blockchain sphere? We invite you to share your thoughts and join the conversation in the chat. Bitcoin's uncertain course as global tensions echo through crypto. Rising crypto valuations face headwinds amid global unrest. Bitcoin holds firm. Bitcoin has maintained its position above a vital threshold this Thursday, following a significant upward surge earlier in the week, even as broader financial markets exhibit caution and the momentum in the crypto sphere begins to wane. We see Bitcoin trading close to $96,200, marking an increase of approximately 1% in the past 24 hours and roughly 6% over the last week. Ethereum hovered around $3,300, showing smaller increments after rising alongside Bitcoin in recent trading sessions. This movement unfolds as risk sentiment beyond the crypto domain softens. Oil prices saw a decline for the first time in 6 days after United States President Donald Trump indicated a possible delay in military action against Iran, alleviating immediate geopolitical strains. Precious metals receded from record peaks, Asian equities inclined downward, and United States stock index futures dipped as investors shifted away from technology shares. In spite of the mixed macroeconomic backdrop, crypto prices had already surged earlier in the day. The total crypto market valuation climbed nearly 5% to approximately $3.25 trillion, elevating prices to their most robust levels in months before the momentum subsided. Sentiment indicators mirrored this transition. The crypto market sentiment index ascended to 48. Its highest mark since late October, suggesting traders are increasingly comfortable taking risks after a cautious conclusion to 2025. According to Alex Kupcikovich, chief market analyst at FX Bureau, Bitcoin's recent movements have enhanced its technical framework. Technically, Bitcoin has overcome several critical obstacles and now has space to advance towards the $100,000 to $106,000 range, he stated. Nevertheless, Thursday's price activity implied consolidation rather than a new upward leg. While Bitcoin and Ethereum retained their gains, the performance across other major tokens was varied. Solana and BNB showed firmness, whereas XRP declined approximately 3% over 24 hours, and Dogecoin fell more than 3%, trailing the broader market. This divergence frequently points to a pause following a rapid upward movement. Strong, sustained rallies usually involve broad participation across major and higher beta tokens, while uneven performance indicates traders securing profits and awaiting the next catalyst. Stablecoins remain stable, with Tether and USDC maintaining their dollar pegs, indicating no signs of market distress or forced selling. With forthcoming United States economic data unlikely to alter expectations for a Federal Reserve rate cut before mid-year, traders are observing whether Bitcoin can maintain its position above $95,000 despite softer equity markets. For the time being, the market seems to be absorbing recent gains. A decisive upward break would necessitate renewed buying across a broader array of tokens, while continued weakness in stragglers like XRP and Dogecoin would reinforce the view that the latest crypto rally is pausing rather than escalating. We at BlockSonic perceive that the interplay between global tensions and market sentiment could carve new paths for cryptocurrencies. How will these dynamics shape Bitcoin's trajectory in the coming months? Share your thoughts and join the conversation in the chat. And don't forget to subscribe to the channel, like, share with your friends, and participate in the chat. The image in this live stream is a real-time game. We're implementing new features where you can interact with the game using commands via chat. Join us! These simple actions really help the project grow and keep BlockSonic running at full speed every day. Senate halts crypto bill amid political turbulence. The Senate Banking Committee stalls its crypto bill, a move rippling through the Bitcoin market with political tensions adding to the digital currency's volatility. The Senate Banking Committee has pressed pause on its anticipated crypto market structure bill previously scheduled for Thursday. This decision follows the public withdrawal of support from major crypto exchange Coinbase on Wednesday, complicating the already tumultuous negotiations and leaving the cryptocurrency sector in a state of flux. The proposed bill, crucial for defining federal oversight of the U.S. crypto industry, was postponed indefinitely, as announced by Committee Chairman Tim Scott late Wednesday. The announcement comes amidst a backdrop of intense bipartisan discussions with inputs from industry leaders and law enforcement aimed at establishing consumer protection and national security while fostering innovation in the withdrawal of Coinbase on the eve of the markup drew significant attention. Yet it was merely one of several challenges that disrupted the bill's progression. Scott's optimism during a Wednesday interview with CoinDesk was tempered by concerns over unresolved differences among negotiators. A major contention involved the bill's stablecoin rewards programs, which faced fierce opposition from Wall Street bankers concerned about the threat to traditional banking, leading to a lack of consensus even within Scott's Republican ranks. Additionally, disagreements on ethics requirements to prevent government officials from profiting from the crypto industry remained unresolved. The Trump administration reportedly resisted proposals targeting these issues, ultimately deferring them to the Senate's Ethics Committee, according to Scott's statement to CoinDesk. Despite years of lobbying and significant campaign investments by the crypto industry, the path to regulation remains uncertain. The Senate Agriculture Committee, responsible for complementary legislation, also postponed its markup, suggesting that, although delayed, the legislative process continues to evolve. The Banking Committee's role remains pivotal in shaping U.S. crypto regulations. Summer Mercenary, CEO of the Blockchain Association, emphasized that the delay signals recalibration rather than defeat, providing an opportunity for further deliberation on complex issues like digital asset market structure. We at BlockSonic perceive that these developments underscore the intricate dance between regulatory frameworks and the dynamic nature of cryptocurrencies. With the regulatory landscape in flux, how will this delay influence the future of Bitcoin and other digital currencies in the U.S.? Share your thoughts and join the discussion in the chat. Crypto legislation chaos. Coinbase shakes the industry. Coinbase's crypto bill withdrawal sparks turmoil, stirring the financial landscape. Dwarf. Is this a win for banks and a setback for Bitcoin? Coinbase's decision to retract support from the United States Senate's crypto market structure bill could extinguish chances for significant legislation this Congress session. As assessed by financial policy analyst Jarrett Seibert of TD Cowen, we perceive this as potentially derailing market structure legislation in this Congress, Seibert articulated in a note to clients on Wednesday. He argued that such a move generally signals that backers view a bill beyond salvaging via negotiation. We interpret delay as negative for crypto and positive for banks, Seibert remarked. Coinbase, having participated in shaping the legislation aimed at clarifying cryptocurrency and exchange regulations in the U.S., found the latest draft, unveiled on Monday night, to harbor too many issues to warrant its endorsement. Coinbase's shares plummeted approximately 2% in after hours, trading on Wednesday following Armstrong's disclosure. Nevertheless, Coinbase's support might be inconsequential, given the bill's apparent lack of legislative backing to proceed in its current form. Two individuals privy to the negotiations informed CoinDesk that the committee lacked votes to advance the bill, irrespective of Coinbase's stance. Even a party-line vote appeared improbable due to bipartisan concerns. Meanwhile, Senator Cynthia Lummis informed Bloomberg that the Senate Banking Committee may defer its hearing on the crypto market structure, initially scheduled for Thursday. Senator Ruben Gallego, a leading Democrat on the committee working on market structure legislation, expressed intentions to vote no on the bill after the White House crypto advisor, Patrick Witt, failed to attend a planned meeting addressing ethics concerns. He emphasized the necessity for a verbal agreement and a game plan for incorporating ethics into the overarching bill. The industry's response was marked by frustration and unease. It is an unfortunate outcome for the industry and Americans, stated Owen Lau, senior analyst at State Street. The bill could lead to a worse outcome than the status quo. Despite noting the crypto sector's growth amid regulatory uncertainty, Lau suggested prolonged uncertainty might ensue. We think the door remains open for negotiations, he added. Central to the discussion is whether the bill, intended to establish a formal structure for crypto market oversight, would benefit or harm an industry historically operating in a nebulous zone. Critics contend that certain bill aspects risk creating a framework favoring established financial institutions over crypto-native entities. Dante Disparte, chief strategy officer at Stablecoin Issuer Circle, cautioned against letting bipartisan negotiations collapse. A durable financial law serving national interest necessitates bipartisan support, he asserted, highlighting the Genius Act as an exemplary model. The opportunity to do with market structure akin to Genius will be squandered if negotiations and bipartisanship deteriorate. Despite the backlash, some on Capitol Hill persist in striving to sustain the legislative process. However, with Coinbase, a major U.S. crypto firm, retracting, the bill's momentum wanes. Amidst Coinbase's retreat, several industry leaders, including rival exchange Kraken, have affirmed their support for the bill. I and Kraken remain fully committed to supporting Chairman Senator Tim Scott and Subcommittee Chair Cynthia Lummis's efforts to advance the market structure bill, Kraken co-CEO Arjun Sethi declared in a post on XI. It has taken many years of sustained bipartisan work to reach this point across administrations and market cycles. Meanwhile, Chris Dixon, managing partner at prominent venture capital firm A16's Crypto, also expressed support on X, asserting that this bill will protect decentralization, support developers, and offer entrepreneurs a fair shot. It's not perfect, and modifications are necessary before it becomes law. But now is the time to propel the Clarity Act forward if we desire the U.S. to remain the premier locale for pioneering the future of crypto, he conveyed in the post. The Digital Chamber, a leading U.S. crypto lobbying entity, echoed this sentiment, suggesting continued engagement with the Senate's process as the bill undergoes revisions. Regardless of tomorrow's markup outcome, we will persist in engaging at every process step to influence a final bill that benefits our members, innovators, and U.S. consumers. Ripple's Brad Garlinghouse, another prominent U.S. CEO, praised the bill on X, deeming it a monumental stride forward in crafting workable frameworks for crypto while safeguarding consumers. Ripple and I know firsthand that clarity triumphs over chaos, and this bill's success is crypto's success. That's success. We at BlockSonic understand that the intersection of regulatory decisions and market dynamics continually shapes the future of cryptocurrency. Could this legislative turbulence redefine the crypto landscape, or will innovation persevere amidst chaos? Share your thoughts and join the conversation in the chat. Crypto bill hearing delay sparks controversy in Senate Banking Committee's crypto bill hearing faces potential delay, reveals Senator Looms. The Senate Banking Committee's crucial hearing on the cryptocurrency market structure bill, initially set for Thursday, may be postponed, Senator Cynthia Looms disclosed to Bloomberg on Wednesday afternoon. This bill, pivotal in shaping the future of cryptocurrency regulation, is stirring significant debate among lawmakers as they approach the intended hearing date, which will culminate in a decisive vote on the bill's progression. The potential delay is not officially confirmed as of Thursday. However, the situation remains fluid, signaling the complexity and contentious nature of the legislation. Senator Looms' spokesperson was unreachable for immediate comment, and similarly, Banking Committee Chairman Tim Scott's representatives did not provide a response when approached for commentary. Coinbase, a major cryptocurrency exchange in the United States, publicly retracted its endorsement of the bill late Wednesday. Despite this withdrawal, informed sources told CoinDesk it might not significantly influence the occurrence or conclusion of the scheduled markup hearing. The primary concern lies in the division among lawmakers on the banking panel, as a lack of consensus could trigger the postponement of the hearing. Particularly, Republican Senator Thom Tillis and others have raised issues with the bill, focusing on the wording related to stablecoin yield, a concern that persisted into Wednesday evening. According to multiple sources knowledgeable about the ongoing discussions, we at BlockSonic perceive this as a pivotal moment for cryptocurrency legislation, underscoring the complex interplay between regulation and innovation. As we navigate these unfolding events, we invite our audience to reflect. How will this legislative impasse shape the future of cryptocurrency regulation? We encourage you to join the conversation and share your thoughts in the chat. Cryptocurrency surge triggers massive liquidations. Bitcoin and Ethereum's explosive moves shake up the crypto market. Bitcoin has seen a significant surge, breaking through the $95,000 resistance mark, igniting a renewed interest in risk assets. According to market analysts, this cryptocurrency rally possesses substantial momentum and potential for further growth. Bitcoin continued its upward trajectory on Wednesday, reaching a peak of $97,800 during the United States trading session. After successfully surpassing the $95,000 resistance that had constrained prices for the previous 2 months, the leading cryptocurrency experienced a 3.5% gain over the past 24 hours. Conversely, Ethereum's Ether, the second largest cryptocurrency, surpassed Bitcoin's gains, rising 5% to $3,380, its highest value in over a month, and surpassing the critical $3,300 level for the first time in 2026. The simultaneous upward movement of the two top cryptocurrencies instigated widespread liquidations across derivatives markets, especially among traders who had made leveraged bets. Approximately $700 million worth of leveraged short positions, bets on declining prices, were eradicated, as reported by CoinGlass. Out of this, about $380 million were Bitcoin shorts, while more than $250 million originated from traders shorting Ether. When traders wager on the decline of an asset's price and the price unexpectedly rises, a liquidation of a short position occurs as those positions are automatically closed by the exchange or broker. This is particularly significant in leveraged trading, such as futures or margin trading, when the trader's collateral or margin is inadequate to cover potential losses resulting from volatile price movements against their predictions. Edith Selby, head of research at CF Benchmarks, commented the break above the $95,000 mark triggered the liquidation of a significant cluster of short positions, compelling demand driven by short covering. However, the rally might not be rooted in a fundamental change, as the price surge seems largely mechanical, propelled by market makers escalating prices to address leftover supply-demand imbalances from the previous downward trend. Referring to the rapid decline observed in October and November, Bitcoin's rise above $95,000 signaled a pivotal green light for the broader digital asset market to adopt a risk-on approach, stated Joel Kruger, a market strategist at Emax Group. This movement has revitalized bullish momentum, with market participants now considering a potential ascent above $100,000 and a potential retest of all-time highs, he noted in a Wednesday statement. The broader cryptocurrency market is exhibiting solid breadth, with numerous large-cap assets following Bitcoin's lead and achieving significant gains as risk appetite resurfaces. Bitcoin's prior all-time high was $126,000 in early October of the previous year. Kruger also highlighted support from traditional markets where equities remain stable and bond yields have steadied, potentially contributing to crypto's rise. The breakout was accompanied by a surge in trading volumes, Kruger observed, implying that the rise is driven by fresh demand. Meanwhile, funding rates across perpetual market swaps remained restrained, according to CoinGlass data, indicating that the price increase is not fueled by speculative excess. Nevertheless, the rally might have finally begun to provide a much-needed bullish signal for cryptocurrency traders. Kruger concluded, a weekly close above $95,000 in Bitcoin or a breakthrough in Ethereum beyond $3,500 would offer a crucial confirmation signal for a renewed upward push. We at BlockSonic perceive that the recent developments in the cryptocurrency market highlight the intricate interplay between investor sentiment, market mechanics, and external economic factors. As the digital asset landscape continues to evolve, the dynamics of such movements hold the potential to reshape market trajectories. Will this cryptocurrency rally sustain its momentum and lead to new all-time highs, or is it merely a temporary surge? Share your thoughts and join the discussion with us in the chat. Crypto legislation showdown. Coinbase withdraws support. Coinbase CEOs bold. Stand against flawed crypto. Bill sparks debate. Coinbase's top executive, Brian Armstrong, has announced that the United States-based crypto exchange is retracting its backing from the U.S. Senate's proposed cryptocurrency market structure bill, citing significant flaws. Armstrong, who has been deeply involved in discussions within Washington's corridors, shared on the social platform X that the draft bill, unveiled on a recent Monday night, has too many issues. Despite this, the Senate Banking Committee plans to proceed with a scheduled hearing on Thursday morning to deliberate on advancing it to the Senate floor. Among Armstrong's concerns are a de facto ban on tokenized equities, proposed regulations affecting decentralized finance, the bill's approach to the Commodity Futures Trading Commission, and various amendments. We acknowledge the rigorous effort by Senate members to achieve a bipartisan resolution, but this draft would degrade the current situation, Armstrong stated. We prefer no legislation over a detrimental one. We hope to refine the proposal. With more than 75 amendments proposed, the bill's outcome remains uncertain as Chairman Tim Scott's committee starts formal consideration. Armstrong remains optimistic that a favorable outcome is achievable with persistent effort and assured continued engagement in discussions. The Digital Chamber, a leading U.S. crypto lobbying group, expressed continued support for the Senate's process. While the draft is evolving, we are advocating targeted enhancements and offering amendments, the group stated. Regardless of tomorrow's markup outcome, we will continually engage to shape a final bill favorable to our members, innovators, and U.S. consumers. Ripple CEO Brad Garlinghouse praised the bill as a significant move toward establishing clear frameworks for crypto while safeguarding consumers. Ripple and I know that clarity triumphs over chaos, and the bill's success is crypto's success, he wrote on XDIs. Negotiations continue on the bill, which aims to determine how federal bodies like the Securities and Exchange Commission and Commodity Futures Trading Commission can regulate crypto markets. Contentious issues include stablecoin yield rewards, anti-money laundering, know your customer regulations and decentralized finance, and companies' registration and disclosure rules with the Securities and Exchange Commission. The crypto industry isn't the only entity with concerns. Political negotiations also involve ethics provisions. Democrats have long voiced worries about potential profiting by former President Donald Trump and his family from crypto, demanding these be addressed in any progressing bill. In an exclusive CoinDesk interview, Scott expressed optimism about reaching consensus on the bill's final aspects, noting the intense discussions have been filled with colorful language and strong opinions. The Blockchain Association, a significant crypto advocacy group, is still evaluating Coinbase's stance and has not yet decided on its next steps. However, banking lobbyists have intensified opposition to the legislation's provision for stablecoin rewards. The American Bankers Association submitted a petition with over 3,200 banks supporting a ban on stablecoin yields, arguing these could divert capital from local lending essential for economic activities like car loans and mortgages. This debate on yield allocation has been central in Coinbase's negotiations over legislative nuances, with the company emphasizing the importance of protecting crypto rewards. Chairman Scott mentioned to CoinDesk that new language regarding yield has circulated among lawmakers, and he remains hopeful for a consensus, though discussions continue. We at BlockSonic understand that this legislative tussle underscores the intricate balance of innovation and regulation in the cryptosphere. The evolving landscape demands our attention. What will be the fate of crypto rewards and decentralized finance as legislation takes form? We invite you to share your thoughts and engage with us in this ongoing conversation. Join us in the chat to discuss your perspectives. Cryptocurrency extinction. A dramatic decline in token survival. The crypto extinction. Over 13 million tokens disappear, leaving the future of Bitcoin in question. In an astonishing revelation, we at BlockSonic have observed that more than half of all cryptocurrency tokens ever launched have met their demise, with the majority of these casualties occurring in the pivotal year of 2025. As revealed by a recent CoinGecko analysis, this comprehensive study scrutinized token listings on Gecko Terminal from mid-2021 to the conclusion of 2025. Out of the nearly 20.2 million tokens that made their debut during this period, a significant 53.2% have ceased active trading. Strikingly, 11.6 million of these failures transpired in 2025 alone, comprising a staggering 86.3% of all token deaths over the past 5 years. The surge in defunct tokens was primarily fueled by the proliferation of low-effort meme coins and experimental projects launched via cryptocurrency launchpads such as Pump.Fun. CoinEcho analyst Sean-Paul Lee noted that these platforms significantly lowered the barriers to token creation, resulting in a flood of speculative assets with little to no developmental support. Many of these tokens vanished after only a few trades, never reaching substantial circulation. The fourth quarter of 2025 marked a particularly dismal period. In a span of just 3 months, 7.7 million tokens failed, accounting for approximately 35% of all cryptocurrency project failures since 2021. This collapse closely followed the October 10th liquidation cascade, during which $19 billion in leveraged cryptocurrency positions were obliterated in a single day. Lee remarked that it was the largest deleveraging event in cryptocurrency history, unsettling markets already overexposed to short-term speculations. To put this in context, only 2,584 projects failed in 2021. This number surged to over 1.3 million in 2024 before skyrocketing in 2025. The data, which included projects with at least one active trade before going silent, underscores how swiftly the open access nature of cryptocurrency can lead to market oversaturation. We at BlockSonic understand the intricate dynamics at play in this evolving landscape. As the cryptocurrency ecosystem grapples with these challenges, we at BlockSonic interpret that the resilience of Bitcoin and other established cryptocurrencies could be tested in unprecedented ways. As we navigate this transformative period, we at BlockSonic pose a compelling question. How will the cryptocurrency community adapt to ensure the sustainability of the blockchain ecosystem in the face of these challenges? We invite you to share your thoughts and join the discussion in the chat. Bitcoin and blockchain revolution. Tokenized stocks take center stage. Blockchain meets Wall Street. Explore cryptocurrency's role in equity trading. We at BlockSonic are witnessing a monumental shift as Figure, a prominent name in the fintech space and led by Sophie founder Mike Cagney, dives deeper into the burgeoning world of tokenization. The firm has launched a groundbreaking stock trading and issuance platform built entirely on blockchain technology, setting the stage for a new era in equity markets. Named the On-Chain Public Equity Network, or Open, the platform unveiled recently empowers companies to issue equity directly on the Provenance blockchain. This innovation bypasses traditional intermediaries such as the Depository Trust and Clearing Corporation. Integrated with Figure's alternative trading system, it offers continuous trading through a limit order book, transforming the way equities are exchanged. Investors can now leverage decentralized finance mechanisms to lend or borrow against their holdings, effectively eliminating the role of prime brokers. This shift underlines the potential of decentralized finance to revolutionize traditional financial structures. Figure itself will be the first to leverage Open by listing its own stock, with plans to make its NASDAQ-listed shares interchangeable with blockchain-registered equity. Figure is at the forefront of this digital transformation. This initiative is part of a wider movement to reimagine the issuance, trading, and custody of public equities through blockchain infrastructure, a trend encapsulated by the tokenization of real-world assets. The market for tokenized stocks, currently valued at $870 million, with over $2 billion in monthly trading volume, is poised for rapid expansion. Regulatory developments are fueling this growth, with SEC Chairman Paul Atkins highlighting the transformative potential of tokenization to enhance transparency and mitigate risks in the financial system. We at BlockSonic understand that these innovations could redefine the landscape of financial markets. The question remains, how will traditional financial institutions adapt to the rising tide of blockchain and cryptocurrency innovations? Share your thoughts and join the conversation in the chat. Senate Banking Chair ignites crypto regulation debate amid Trump controversy. Crypto regulation bill faces hurdles. Trump ties and unresolved issues spark Senate debating. In a scenario where the digital currency landscape intersects with political intricacies, we find ourselves at the cusp of significant legislative developments. Senator Tim Scott, at the helm of the Senate Banking Committee, expressed his intention to advance the proposed cryptocurrency market structure bill. However, the road to clarity is fraught with unresolved dilemmas, including an ethics clash tied to former President Donald Trump, which some argue has no place in the current legislative framework. The contentious debate concerning whether Democrats can legally exclude President Trump from the cryptocurrency arena has been deemed extraneous to the ongoing market structure bill. We at BlockSonic recognize that the ethics dispute is slated for separate deliberation within the Senate's ethics panel, a distinct committee with its own governance. The ethics language must navigate through our body's jurisdictional channels, specifically the Ethics Committee, Scott articulated, stressing that incorporating such language into the bill presents a formidable challenge. As we approach the crucial markup, Scott acknowledged that the ongoing discourse over stablecoin incentives remains unresolved. This issue has prompted hesitations from both political factions regarding the compromise embedded in the current draft. Scott noted that relentless efforts have been undertaken to refine the language, which is under bipartisan scrutiny. To address concerns that stablecoins could undermine traditional banking deposits, the draft bill, diverging from last year's Genius Act, proposed restricting rewards for holding tokens in a manner akin to savings accounts. Instead, rewards would be preserved for active token use and transactions. Despite these adjustments, discomfort with this provision persists among some lawmakers, as per sources. With revised text in circulation, Scott revealed that lawmakers are consulting with stakeholders in their constituencies, hoping for a favorable consensus on the proposed language. The crypto sector has invested years and substantial financial resources in political advocacy to reach this legislative juncture, marking a pivotal objective for the industry. The forthcoming Senate vote on the Digital Asset Market Clarity Act could cement crypto's regulatory standing within the United States financial system, heralding a surge of investment and activity. As 2026 dawned, unresolved issues lingered in the Clarity Act negotiations. Democratic lawmakers advocated for measures limiting senior officials' crypto business profits, explicitly targeting Trump. Scott asserted that these matters would be addressed as part of a broader package in due course, given jurisdictional constraints. "I anticipate resolution before the bill exits the floor," Scott stated. He indicated ongoing legislative efforts led by Republican Senator Cynthia Lummis and Democratic Senator Ruben Gallego, who previously declared the ethics provision a non-negotiable aspect. Thursday's proceedings in Scott's committee will feature a markup hearing considering amendments from both parties before voting on a refined bill version. Should it pass, the bill requires further approval from the Senate Agriculture Committee, scheduled later this month. If both committees advance their bills, they will merge for a Senate vote. When queried about his urgency for a markup, Scott emphasized the protracted nature of talks since the previous year. "Ultimately, a vote is imperative," he declared. Some may fear the ramifications of a no vote, attempting to delay to avoid confronting those consequences. We at BlockSonic interpret these developments as a crucial intersection of politics and cryptocurrency evolution. Will the resolution of these legislative intricacies propel the crypto sector toward unprecedented legitimacy? We encourage you to share your thoughts and engage in this pivotal discussion in the chat. Crypto's high stakes. Markets surge while Bitcoin awaits. So, will Bitcoin ride the wave? Crypto's future hangs in balance. In this week's Crypto Insight, we delve into the currents shaping the digital asset seas. As traditional markets reach unprecedented peaks, Bitcoin and its peers linger in anticipation. We dissect the forces at play, from liquidity flows to emerging blockchain ecosystems, and what they mean for the future of cryptocurrency. Welcome to our deep dive into the crypto landscape. This week, we explore the interactions between traditional equity markets and digital assets. Equity markets have ascended to new all-time highs, with indices like the S&P 500 and the Nasdaq 100 making significant strides. The energy, commodities, and small-cap sectors show resilience, contrasting the underperformance of tech giants like Google, Amazon, and Tesla. Meanwhile, the Federal Reserve's stance on interest rates remains unaffected by inflation, hinting at a future rate cut in the second quarter as liquidity returns to the system. Cryptocurrencies, in contrast, face a period of uncertainty. Gold and silver's performance poses a challenge to Bitcoin and Ethereum as capital waits to shift back into the crypto sphere. We observe potential in assets like Metaplanet and Monero, with the latter poised for gains amid a growing privacy coin narrative. Technical indicators for Bitcoin suggest a potential turnaround, with patterns pointing towards a bullish reversal. While ETF outflows remain a concern, positioning data implies a shift towards a bullish sentiment. As commercial miners turn optimistic and hash rate attempts stabilization, the stage is set for a potential pivotal moment. Our analysis reveals that the infrastructure phase of institutional adoption is well underway, with financial institutions laying the groundwork for deeper involvement. This is evident as the gap between blockchain activity and token price performance widens. Ethereum's ecosystem strengthens despite price stagnation, and Solana's internal economy gains traction, highlighting a shift in value capture. The evolution of crypto markets now hinges on an application-level monetization and institutional utility. We at BlockSonic understand that these factors will play a crucial role in shaping future dynamics. As investors become more selective, the landscape continues to evolve, paving the way for new opportunities. The question we pose to you: how will the interplay between traditional finance and crypto assets shape the future of digital currencies? We invite you to join the conversation and share your thoughts with us in the chat. Let's explore the possibilities together. Stablecoins, Zcash, and Bitcoin's quantum defense. Crypto under siege. Zcash's turmoil deepens as developers exit, while Bitcoin braces for a quantum future. Ethereum's Buterin critiques stablecoins' US dollar dependency. Vitalik Buterin, the co-founder of Ethereum, has spotlighted fundamental design flaws in decentralized stablecoins, suggesting that the crypto world has yet to address these issues effectively. Buterin took to a social platform to outline 3 core challenges that he believes remain unresolved in the stablecoin domain. His critique did not promote any particular project nor propose a new stablecoin, but rather offered a reflective analysis of why current decentralized stablecoin designs might falter over time. By their nature, stablecoins are cryptocurrencies that aim to maintain a stable value, often pegged to the US dollar. While some stablecoins are backed by companies holding dollar reserves or equivalent assets, decentralized stablecoins strive for stability through code, collateral, and market incentives. Buterin's primary concern is the reliance of most decentralized stablecoins on the US dollar. He acknowledged that, in the short term, this makes sense. However, he argued that systems designed to resist political or economic upheavals should not be indefinitely tied to one national currency. Over extended periods, even moderate inflation could diminish the utility of a dollar peg. Buterin proposed that future stablecoins might benefit from tracking broader price indexes or measures of purchasing power, instead of relying solely on the dollar. The second issue Buterin raised pertains to oracles, which are mechanisms that deliver real-world data like asset prices to blockchains. Because blockchains cannot directly access external information, they depend on oracles for prices used by smart contracts. Boddarin cautioned that if an oracle is susceptible to manipulation by entities with significant capital, the entire system becomes vulnerable. The Zcash network is currently experiencing turbulence following the departure of its main development team at Electric Coin Company, ETFs. This exit came after a disagreement with Bootstrap, a non-profit organization established to support the Zcash network. In the aftermath, the Zcash token ZEC saw a significant drop of nearly 14% in 24 hours. Josh Swihart, the chief executive officer at ECC, explained on a social platform that the majority of Bootstrap's board members, including Zaki Manian, Christina Garman, Alan Fairless, and Michelle Locke, had diverged from what he described as the mission of Zcash. Swihart stated that EC staff were effectively constructively discharged, meaning their working conditions changed so drastically that they could no longer perform their duties effectively and with integrity. In an intriguing development, Elon Musk's social platform is working on a feature to refine financial and crypto-related discussions. According to a post by the head of product at the platform, smart cash tags will soon allow users to specify the exact asset or smart contract when posting a ticker. This feature will enable users to tap these tags directly from their timeline to view real-time price data and related mentions of the asset. The post emphasized that the platform is a prime source for financial news, with substantial sums of money being influenced by the information shared. The company is collecting feedback as it progresses toward a potential public release next month. Solana Labs highlighted the significance for the crypto community, noting that smart cash tags would enable users to tag Solana-based tokens and view related information directly on the platform. A screenshot shared with the post suggested that users could select from a list of assets, including Bitcoin, Bonk, and Base, indicating posts could link to asset-specific pages showing prices and discussions. The looming threat of quantum computing poses a significant challenge to cryptocurrencies, often portrayed as vulnerable to breakthroughs in quantum mechanics. These advanced computer chips can perform calculations exponentially faster than traditional processors, putting existing cryptography at risk. However, efforts are underway to develop quantum-resistant algorithms as a safeguard. One such initiative is Bitcoin Quantum by BTQ Technologies, a post-quantum cryptography specialist. Bitcoin Quantum, a permissionless Bitcoin fork, aims to address the quantum challenge. It offers a public runnable testnet where miners, developers, researchers, and users can test quantum-resistant transactions and explore operational trade-offs before any mainnet-level migration becomes pressing. BTQ's head of quantum innovation, Chris Tam, explained that the system includes a block explorer and a mining pool, providing immediate accessibility. We at BlockSonic understand that these developments in stablecoin design, the challenges faced by the Zcash network, the introduction of smart cash tags, and the defense strategies against quantum computing have profound implications for the cryptocurrency landscape. How do you perceive these shifts in the crypto world? We invite you to join the conversation and share your thoughts in the chat. Thanks a lot for tuning in to BlockSonic today. We'll see you in the next live session with more news, analysis, and market alerts. Until then, keep your eyes on Bitcoin and keep listening to the sound of the blockchain.